What's up YouTube? Chris with Millennial Money here. How's it going? In today's video, I want to talk about an article that I read that was really quite thought-provoking and really made me think about some things as far as investing versus gambling. What does that mean and how does that really differ? What are the differences between them? Be sure to smash that like button because YouTube loves its algorithms. And be sure to subscribe with notifications, hit that bell, and watch later on in the video for a question you can answer in the comments. So after reading this article, it really got me thinking, who gets to make the decision as to whether or not you're big enough or small enough, financially speaking, to be able to take chances on Wall Street? With this, I started asking myself a couple of what I thought pretty simple questions. What is the difference between investing and gambling? It's really the same thing, isn't it? Or what is the difference? Should Wall Street only be accessible to people that are actually in New York and only have $50,000 or $100,000 that they can throw down and say, hey, let's take a chance today. Let's try something out. Or is this something that should be accessible to everyone at all different levels? You, me. I know I'm brand new at investing. I read articles and I read a lot of financial news, but I would by no means call myself an expert. What's the difference though? Do platforms like Robinhood, Webull, Sophie, I think that's how you say it, or other applications that are more serious like Thinkorswim or some of the other major trading platforms have real differences? Does it feel to you like one of them is easier or more accessible, or one is more complicated and this absolute monster with so much information you don't know what to do with? After thinking about some of these questions, I concluded investing is complicated, but you can still get lucky, right? I could make a $1,000 bet today or $1,000 gamble on a stock and I could come out ahead, right? Because there's a lot to cover in this. These are deep questions. I decided to break this video up into two parts. Today, I'm going to be covering the first part where I'm going to cover some of the first questions that I ask. What is the difference between investing and gambling? And should Wall Street only be accessible to the big fish, not the little guy like you and me? So I have a question for you. Go ahead and answer down in the comments. Do you think Robinhood is using marketing to make their investing look easy and less complicated? Like, I don't need to know exactly what I'm doing, but it's still accessible to me, versus Thinkorswim, where you're just bombarded with information and maybe you feel intimidated. Maybe you feel like there's no way I could do this or ever make money off of it. Go ahead, let me know. Let's get into this. What is the difference between investing and gambling, in my opinion? Gambling is the activity or practice of betting money or other things in a game of chance or stakes. On the contrary, investing is defined as the investing of money or capital in order to gain a profitable return as interest, income, or appreciation in value. Both of these definitions come from dictionary.com, so I'd say they're pretty safe. But what is the difference? Really, we're talking about odds, and we're talking about investing in something that might not give you a return. Of course, there's an expectation that you're going to win, but does that just mean that one has an inherent expectation that you will lose? I think that one of the big differences between the two is instant gratification versus long-term or delayed gratification. Using this, we can say that gambling, or putting money into a slot machine, or putting a bet on a craps table, or making a bet in blackjack of playing cards, you are instantly gratifying yourself by a probability that you will win. There's that great anticipation, and there's those nerves, and there's that excitement, there's endorphins going on. All of this is just making you feel good, and it's instant. You'll know very quickly whether you've won or lost. Delayed gratification or delayed reward is basically you setting yourself up for something in the long run. A company might not post instant results. Yeah, stock prices go up a little bit depending on if it's a blue chip stock or maybe it's a penny stock that has a lot of volatility, but that doesn't mean that you're guaranteed instant reward. Very similar to how you would gamble with money. But in my opinion, a big difference here is that when you're talking about delayed gratification, you're in a stock for a period of time. You unless you are an avid day trader and you're watching every single one of those up and down transactions, a buy and a sell, you're not going to know whether or not you've made money. Companies take time to build and be profitable. So by investing in companies, you're going in with the anticipation that you're not going to see any sort of return on that for some period of time out into the future. I think one of the big differences here is how they're marketed. Instant gratification is marketed as something that is exciting, something that you should do impulsively. Or on the flip side, long-term or delayed gratification is seen as something that you're not going to see this money for a while. If you put it into a company, you may not see it for 6 months. You may not see it for a year. But in that 6 months or year time frame, you should expect some sort of return on that investment. So on to the second question. Should Wall Street be the only people who have accessibility to these vehicles that could potentially be life-altering or life-changing if we're talking about the stock market? Because as soon as you turn 18 or 21, you can go to the casino. So I think that apps or other investment tools that you can use and having them available freely on the internet is a huge plus, because then people like myself or potentially even you have access to this vehicle that could change your life. You're going to earn some sort of reward or profit for that action. And I think that having the ability to use that is a huge advantage, especially when we're looking towards retirement. We're looking 20, 30, maybe even 40 years down the road. And these vehicles will help you to achieve goals that you're setting for yourself today and aren't expecting any sort of capitalization on or withdraw from until the far, far future. So that is what I think one of the differences is. So what is the difference between an app and a brokerage or an investment firm? Well, basically, you're deciding if I use an app like Robinhood, Webull, any of these other ones that I mentioned, you are going to be the educated professional that's going to be making these trades. If you choose to go to a brokerage, you might be getting advice from somebody that has 10 years of experience. And maybe you have 10 years of experience, but you don't do this full time, do you? I know I don't. They are doing this full time. They're getting expert advice from all kinds of different services, but does that make their opinion more valid than yours? Absolutely not. So why should you be putting your money in someone else's hands? Maybe you're far more educated than they are in exactly what you want to trade. Some of this dribbles into you're self-taught. You're reading articles. You're getting advice from other sources, maybe friends, family, the internet. Where are they getting their information from? You might not ever know, but they're paying for it in some way. So does that mean that they're that much more qualified? I don't think so. I think what this really comes down to is how motivated are you to succeed at something? And if you are that motivated, if you are that go-getter about, you know what, I'm going to know everything there is to know about this, and I'm going to be the best at trading in stocks, whether that's daily, monthly, maybe dividends or real estate funds, or pick a market segment. You can go be an expert in any of it. Maybe you're already an expert in something. Use that knowledge. I think one thing that can often be super helpful is having information come from other sources, and maybe those sources are paid. Maybe you get Investor's Business Daily, or maybe you're part of the Motley Fool. These subscription services can be very helpful and can prove extremely beneficial. So I wanted to tell you a quick story because I found this absolutely amazing and has blown my mind. So I pay for a subscription to get information about different stocks. In these news articles that they offered me, one of them came across and I was intrigued. The symbol was LVGO. And at the time, this is in the middle of the COVID recession, this stock was trading at $27.10. I purchased it on my Thinkorswim Ameritrade account at $27.10. If you look at that current stock price, you'll see that I think 2 or 3 days ago, it was trading at $107 and some change. It blew my mind that advice that I was paying for, and there's more articles than I could ever read in a day, was that substantial and could help me, had I actually bought it with real money, to make these kind of differences, to make these kind of gains. I want to encourage you. You can use resources, you can do things that you might think are out of your reach, but if you challenge yourself, read, and just try to learn as much as you can, become committed to the art of learning, you can have success stories like this, or like I wish it was, and you will find yourself in a position of success. So with this, I'd like to say thank you for stopping by and checking out the video. I really appreciate it. Go ahead, like, make sure to comment, and please ask questions. I don't know everything, but I know there's a ton of really smart people who are watching these videos, and maybe they can help answer questions. And don't forget to subscribe to the channel. Thanks for stopping by. I'll catch y'all next week.